Okay, children, now let us start with a new chapter called Bills of Exchange. Okay, so it's only for a theory part, and I will be discussing only few basic things. Okay, because explaining everything in great detail is not possible in one single video. So as we proceed with numericals, I will be discussing other things too. Okay, so what is bill of exchange? Now, the definition has been given in the Section 5 of Negotiable Instruments Act 1881. As you can see, the definition is given out here only. I just don't want to read it out because it's just written. You can pause the video, okay, and you can have a look at the definition. But what it is saying actually, it is saying that it's an instrument, okay, in writing containing the unconditional order, okay, signed by the drawer, that is a maker, okay, directing to a certain person, that is a drawee, to pay a certain amount of money. Okay, so that direction to or the order to pay a certain amount of money can be based upon the transaction, okay, or due to the terms of the agreement. Okay, now by instrument, what do we mean? By instrument, we are actually referring to the instrument uh, which we can use for the deferred payment. Okay, if you have to pay to someone, you can pay by check. Okay, you can pay by bank draft, or you can pay by bills of exchange. Okay, but normal payment that we do is by the cash or by the bank payment. Okay, be it IMPS or RTGS, or these days now UPI is very famous in India. So apart from this, okay, this cash and the bank or the UPI payments, etc., the other type of instrument that we use are basically referred to as the instrument of payment. Okay, so don't get confused with that. I have already sent you a format of bills of exchange. So this is one more sample format of bill of exchange. Now, this bill of exchange, it will contain the stamp, okay, a revenue stamp. Okay, I hope you have seen that revenue stamp. Okay, so here the amount will be mentioned, okay, and the conditions or the terms of the uh, bill of exchange will be mentioned out here. Okay, and this will be the part of the drawer, that is who is making the bill, okay, who is drawing the bill in someone's favor, and this is from the part of the drawee, okay, who will accept the bill. Okay, this drawer will actually make the bill. Okay, he is a maker of the bill, and he will, this drawee will accept the bill. Okay, now the parties to a bill of exchange. Uh, there are actually three main parties. Okay, they say that people say that there are only three main parties, but it should be remembered that there are four parties involved out here. Okay, in fact, the drawer, drawee, the payee, and the payer. Okay, the drawer is the person who writes the bill. Okay, for example, okay, let me just take you to that cash book only. In that particular chapter, we used to have a particular question that checks issued rupees 2500. Okay, and even in the BRS we saw that checks issued but not presented for payment yet. So if anybody is issuing the check, okay, what do we say, what we used to write? we used to write that the checks drawn, isn't it? If you are issuing the check to someone, then we used to write as checks drawn. So if anybody is issuing the bill of exchange or writing a bill of exchange or drawing a bill of exchange is known as the drawer. Okay, but this bill of exchange is basically prepared not for the payment but actually for the receipt. Okay, and drawee is the person on whom the bill is actually drawn. So this drawee is the person who will actually make the payment. Okay, so now the payee is the person to whom the money is actually paid. Okay, and the payer is the person who makes the payment. So you can basically make a relationship out here that the drawer is the payee. Okay, the drawer is the pay because the drawer is the person who is drawing the bill of exchange, and the payee is actually the person to whom the money is paid, isn't it? And again, the drawee is a person on whom the bill is drawn, and the same person is supposed to make the payment. Okay, but sometimes the drawer can be different. Okay, the drawee can be different, and the payee can be different, and also the payer can be different. So it depends. Okay, if a drawer has kept the bill with himself till the maturity date, then at this situation both the drawer and the payee are the same person. Okay, and the drawee is the person on whom the bill is drawn is a separate person. Okay, so in this particular case, only two parties are involved. That is the drawer, in bracket the payee, and drawee. So only two parties are involved. But if the bill has been discounted, okay, if the bill is actually discounted, then at this situation, the drawer will be the person who has drawn the bill. Now, a drawee is a person on whom the bill is drawn, okay, and payee will be the bank. So we will see when we do the numerical questions. Okay, so just by this explanation, you will not understand very clearly. Let me just show you one picture. Okay, so this is your diagram which you can see out here. Okay, so drawer is a seller or an exporter. Okay, and drawee is a buyer. As I already said that this whenever any person is drawing a bill, okay, is known as the drawer. Now this drawer is actually drawing the check not for the payment but for the receipt. Because let us just say that I have a shop. Okay, I sell books, and you want to purchase books of accounts from me. Okay, and you said that you don't have money at the moment. Okay, you will be able to make the payment after a month. Okay, so at this situation, what I will do is that I will draw this kind of bill. Okay, so I will draw the bill. So I will be the drawer and you will be the drawee because you are accepting that particular bill. Okay, so you are the buyer. So buyer is a drawee and seller is your drawer. Okay, but if the bill has been discounted, with the bank, then payee will be your bank, the person to whom the money is payable. So if I draw that bill with my bank, then payee will be the bank. Okay, but if I keep the bill with me only till the maturity date, then both drawer and payee will be the same person. Okay, so I will be both drawer as well as the payee. Okay, so if you have not understood this particular relationship between these parties, please go back and start the video from very beginning. Okay, from where you want to start with. Okay, and remember this pair is actually a person who is making the payment. Okay. Normally, this drawee is only the payer because he is supposed to make the payment. Okay, so don't get confused. Now, due date of a bill. Now, whenever you draw a bill, it should be provided with 3 days of grace period. Okay, so bills of exchange will have 3 days of grace period. Now, it should be remembered that when the last date of day of grace falls on public holidays, the bill shall be deemed to be paid on the preceding day. That is, by preceding day, we mean that is the one day before. Okay. But when the last day of grace is falling on the emergency holiday, then the bill can be paid one day after. Okay. So you should remember this point. It's very, very important to remember. Okay. Public holidays, one day before. Emergency holidays, one day after. By public holidays, we mean Sundays. So Sunday is a public holiday. Okay. And if there's any kind of holiday that is announced by the government, like we have this 15th of August, okay, Independence Day celebration, then Republic Day celebration, okay, Netaji Jayanti, okay, Gandhi Jayanti, okay. So these are the what? These are your public holidays. Okay, so in case of public holidays, bill must be paid one day before. Okay, so but in case of emergency holiday, bill can be paid one day after. Okay, but it should be noted that a bill payable at site, that is on demand or on presentation, is not entitled to grace. 2 days of grace. Okay, so if a bill is payable at site, then such bills will have no grace period. Okay. Now, depending on the basis of due date, okay. Now, depending on this due date, the bill can be classified as 3 types. Okay. Bill at site, bill after site, and bill after date. Now, bill at site. Bill at site is actually, the due date is the date on which a bill is presented for payment. Okay, whenever the bill is taken for the payment, okay, whenever a bill is presented for the payment, so that day will be the due date. Okay, but bill after site, it's like whenever a bill is drawn, okay, but has not been accepted till let's say till next week. So then the due date will start only when that drawee will look at that bill. Okay, only when after the acceptance of the bill. Let us say that I draw a bill of rupees 500. Okay, but drew a bill for 500 for 1 month. Okay, for 1 month. Okay, and I draw the bill on 17th of December. Okay, but you saw the bill on 1st of January. So then from 1st of January, okay, after you see the bill, after you accept the bill, then your 1 month, the period of 1 month will start. Okay, plus 3 days of grace. Okay, so that is the maturity date. Bill after date. Now, what is the difference between the bill after site and bill after date? Bill after date is actually the date, the due date will start from the date of its drawing. Okay, like I draw a bill on 17th of December. Okay, but you did not see the bill till 25th of December. Okay, and now you saw the bill and you now are complaining me, I saw the bill on 25th of December, but you drew the bill on 17th of December, please give me extra 7 days period. No, it's not possible. Why? Because it is a bill after date. Okay, yes, it can be possible. Okay, it is possible uh, only in case of bill after sight, only after the drawee has seen and accepted the bill. Okay, now depending upon the basis of accounting point of view, bill can be classified on the into two categories. One is called a trade bill, and the other one is called the accommodation bill. Okay, now what is a trade bill? Now, trade bill is a bill of exchange drawn and accepted just to settle a business transaction. Okay, just like I give you the example of rupees 500. Okay, for purchasing a book. Okay, for making some kind of payment. Okay, so that's your trade bill. But this accommodation bill is a type of bill which is drawn and accepted for mutual help. Let's say uh, you want to purchase a bike, for example, and you want a kind of help from me. Okay, let's say for rupees 500, again, same amount, 500 rupees. Now, this 500 rupees, you are asking some kind of help from me. Okay, I want 500 rupees because I have to purchase one good helmet also. So you need extra 500 rupees. You are having a shortage of rupees 500. So I said that, okay, I will make you the payment. So if I draw a bill, okay, so this type of bill is known as the accommodation bill. Okay. Now, the types of bill of exchange on the basis of point of view of amount to be received or paid, that is on depending upon the transaction, a bill can be of two types. One is called bills receivable, and the other one is known as the bills payable. Actually, in fact, this bill, the same bill, it can be bills receivable as well as the bills payable. Let us say that you purchased some amount of uh, let's say stock of goods from me. Okay, rupees 2 lakh. Okay, and you are Mr. ABC, Mr. or Miss ABC. Okay, so you purchased goods of stock from my shop, and you agreed to pay me after 60 days. Okay, amounting rupees 2 lakh. I am a seller, you are a buyer. Okay, so you promised me to pay me the bill, pay me the amount after 60 days. So for me, this bill is the bills receivable, but for you, it will be the bills payable because you are supposed to pay the amount, and for me, I am supposed to receive the amount. So the same bill, that is the same single bill, it can be receivable as well as the payable depending upon the standpoint of the drawer and drawee. Okay, the payer and the receiver. I mean the the drawer and the payee, and as well as the drawee. Okay, let's not go into these technical terms. Now, accounting cases of bills of exchange. Now, what are the accounting cases of bills of exchange? These are six cases that I have highlighted out here. Okay, there can be more cases also. Now, number one, bill is held by the drawer till the maturity. Okay, fine. Bill is discounted by the drawer before maturity. Okay, so if a bill is held by the drawer till maturity, you will do a separate kind of entry. Okay, now if the bill is discounted by the drawer, then there will be different kind of entry. Okay, the treatment will be something different. But if again this bill is endorsed by a drawer, again the treatment will be different. Okay, but sometimes the bill can get retired before maturity also. Okay, the treatment again will be different. Okay, now sometimes the bill can be dishonored also. And you are familiar with this term, dishonor. The check was dishonored. I hope you remember this from cash book. Okay, maybe it was in the BRS also. I don't remember exactly, but it was there in cash book. So sometimes the bill can get dishonored also. So what is the dishonor of bill? By dishonor of bill, we mean that the drawee fails to make the payment on the date of maturity. That is called dishonor of bill. Okay, and this dishonor can be applicable in this number one, as well as number two, as well as number three. So this dishonor can be in these three cases. Okay, and sometimes the bill can be renewed also, and this renewal can be of two types. One is the dishonor of bill, and again the renewal of bill with some kind of penalty. Okay, or some part payment can be made and a bill can be renewed. Okay, a fresh bill will be drawn. So these are the basic accounting cases of bills of exchange. Okay, and it's just a basic theory. I didn't go in detail about this features, advantages, disadvantages, and other items. Okay, please go through the theory once. Okay, but you will see one more item that is called the promissory note. Okay, promissory note. Now, what is a promissory note? Promissory note is a note in which you are promising someone to make the payment. So you can see here in this bills of exchange that uh, this 60 days after the date, pay Mr. ABC a sum of rupees for a value for value received. Now assume that you are ABC and I am a drawer. Okay, okay. Assuming me to be the drawer, you will pay me. Okay, so in that particular case, your name will be out here. Okay, even in the previous example also, your name should be out here, ABC, because let me just be the drawer for a time being. So here my name will be out here. Okay, Mr. P Thapa, a sum of rupees 2 lakh. So his name is the drawer. Okay, P Thapa is a drawer, and Mr. ABC or Miss ABC is the drawee. Okay, so on top it will be written promissory note. So the accounting treatment for bill of exchange and promissory note are almost similar to each other. Okay, so they are not just so different from each other. So let us not go into detail. Okay, so just go through the theory. It's very, very simple. You just have to pass the journal entries. Okay, and remember this. Sorry, yeah, this one, parties to a bill of exchange. Okay, so I have included this fourth one also, so don't get confused with this one. Okay, with this one, so don't get confused with the pair. And remember this picture and this due date of bill. Okay, and about this bill at site, bill after site, bill after date, trade bill, accommodation bill. Okay, and the other one is the bills receivable and the bills payable, and the types of cases. Okay, what type of questions can be there? Okay, from the accounting standpoint from this particular chapter. Okay, so yeah, that was the last slide. So this is all what I had to say about bills of exchange. Okay, it's very, very simple chapter. Just know few things about, okay, the definition and the meaning. Okay, the parties involved. Okay, this particular picture, and types of bills and accounting cases.